Join us now to talk technical levels. Katie Stockton, founder and managing partner for Fairlead Strategies. She's also a CNBC contributor. And I guess we could start where we left off not that many sessions ago, Katie. And you did note that there had been a little bit, you had noticed some relative strength, at least with Bitcoin. And I don't know whether that, I don't think you thought it was the start of anything substantial, but it has acted a little better than the Nasdaq at this point.
Yeah, we've actually seen the correlation between Bitcoin and the Nasdaq 100 really decrease this year to date. And I think it's interesting. I think it's a reflection of the rally. So when we see markets or sort of most asset classes going down, everybody gets into this risk-off mode, and they therein sort of penalize all asset classes. And that's where you have the correlations actually increase. But of course, when you have the contrary, where Bitcoin is rallying, where the Nasdaq 100 was in a recovery mode for January, certainly, that then saw those correlations decrease. And that, if it's sustained, kind of puts us back into the frame of mind that we were in 2021, a much better environment for Bitcoin, of course. We suspect, however, that with equities now declining again, that we will get back into that higher correlation mode between Bitcoin, the Nasdaq 100, and other risk assets. And it's at a proving ground on the chart. So if you look at Bitcoin versus resistance, it's still in that 25,200 area. It needs to clear that level in order to look better, because that would resolve a trading range to the upside and tell us that that range is more likely a reversal pattern versus a continuation pattern.
Because it did get from 17 or just under 17,000. The move to 23, 24 was very quick. And then it really did hit a wall. It tried a couple of times. I think it got above 25 just barely, but didn't hold and definitely didn't continue to move like it did for the first 40% or whatever. Katie, at this point, let me just shift gears to the 10-year. We can either talk yield or principal. I guess let's talk yield. What's the resistance for the yield right now? Is it 4%? And do you expect that to be breached finally? Because now I'm questioning it again. It depends on what some of these economic numbers look like over the next 2 or 3 weeks.
That 4% level, definitely a psychological threshold. I wouldn't call it a strong resistance level per se, but any kind of big round number like that definitely could create some consolidation. And in fact, I think that's what we're seeing right now, a little consolidation just shy of that 4% zone. The indicators, we just wrote this up this morning, do support a breakout above 4%. There was already a couple of breakouts above more minor resistance levels like the 50-day moving average. And now the next resistance that's meaningful is at the October 2022 high, and that's about 434 for yields. So we do think there's going to be progress towards that resistance level, and yet our bias for the next several months is really more neutral, and that goes not only for yields but also for the dollar. And that's because we've seen a pretty meaningful loss of long-term upside momentum there, and it's been associated with some of those counter-trend signals that we source the DeMark indicators for. So we're looking for more neutral action overall, but with the upward bias here in the near term.